Hello, everybody. My name is Matt Scheffler. I'm a student at DePaul, and today I'm going to be taking you guys through my Bloomberg terminal analysis project. For my company, I chose Intel, and nowadays, with AI especially, they're one of the most recognizable names in the tech industry, but also one that's been facing some pretty serious financial challenges lately. Um, so let's get into it here. So more about Intel. I kind of picked them because they're in a really interesting spot right now. Um, I think the big titans in their industry have been AMD and Nvidia over the past couple of years, and recently Intel's kind of been lagging behind, and they're trying to reinvent themselves with a new AI strategy and focus on rebuilding its leadership. Um, but I think what makes them especially worth looking at from a credit standpoint is the uh, duality between their needs of investment now and financial strain over the past few years because um, over the past few years, their cash flow has been negative and its total debt has climbed to 50 billion with a B. So definitely needs some looking into. Um, and also just from kind of like a more personal perspective, on this slide we can see their stock over the last year, and obviously as of late it's been doing very well. Um, but overall it's been pretty volatile. Um, and that kind of reflects investors' optimism about AI, but doubts of how well Intel themselves can do. Um, so let's move to the next one. So default risk for Bloomberg. Looking at Bloomberg's default risk model, um, Intel's 1 year default probability is currently around 0.2460%, which is pretty low and consistent with investment grade credit. But over 5 years, that probability jumps to around 1%, showing that the market expects more uncertainty in the long term. Um, this increase kind of reflects some underlying issues. Like we talked about a little bit earlier, Intel is very high leveraged. They have relatively weak profitability, and they're still kind of in a turnaround stage pretty early on. So still have a couple issues for sure. Um, Basically, though, Bloomberg's model is kind of telling us that Intel's short-term solutions aren't in doubt, but investors see like that they basically have to see it to believe it. Um, so let's move to credit. Um, According to their credit profile, Intel is rated differently but stable by the first two ratings, and then the third is negative, but they're all around, an investment grade. But that lower boundary where they're kind of approaching that junk area, like this title of this article indicates. Um, Over the past few years, these ratings have kind of trended downward, reflecting like their weak cash flows, like we also stated earlier. Um, so all these three kind of reflect either stable or negative uh, outlooks. Um, and then compared to the model from the past, which is slightly more cautious, the agencies seem to be giving Intel some benefit of the doubt, um, expecting its restructuring and cost cutting now to eventually pay off. Um, and then we have some financials as well, like I kind of went over already. Their total debt is at around 50 billion. They're super focused on the future and kind of, like I said earlier as well, trying to re-cement themselves into the market. And then the same with that free cash flow idea. But they are attracting, like this is the headline, obviously. Uh, they're attracting deep-pocketed friends, such as Nvidia, SoftBank, and even the U.S. government to provide short-term financial relief. But like we kind of said in the last slide, that those ratings don't really reflect that because, like I said earlier as well, we got to kind of see it to believe it. So as far as the news, um, the recent Bloomberg articles by one of their analysts, Robert Schiffman, kind of tie this whole thing together. So Intel's been raising their capital and attracting those big investors, like I said, because they want to strengthen their balance sheet and then also their chip manufacturing capacity. Um, and then at the same time, their management wants to deleverage their company. Obviously, like we said a couple of times now, they're 50 billion in debt. Um, so they are in like the early stage turnaround kind of. There's positive steps being made and the financial risk is still there. And like I've said a couple times now, we at this point we have to see it to believe it. Um, so the market is kind of at like a cautiously optimistic point where they're not fully out or fully bought in. Um, they have to see it to believe it. And kind of to sum it all up, Intel's credit story is really about balancing, I guess, their opportunity with risk. Um, like its near-term default probability is pretty low, and their investment grades are pretty stable for the most part. But its longer-term outlook definitely depends on whether management can deliver results on AI, cost efficiency, and debt reduction. Um, this company's case kind of shows you how a major blue chip company can face credit risk when strategy and cash flow and even competition collide at once. Um, and overall, their turnaround is underway, but the next year will be pretty huge in determining whether it can move from short-term stabilization to long-term growth and sustainability. So thank you so much for watching.